Do you have the right tools for mortgage lending and do you know how to use them? Mortgages from now on are very different from anything that you've seen in the past. If you make a mistake, you may not be able to fix it. Do-overs are a thing of the past. Putting your mistakes in your portfolio may not be an option either. You can't use the same old tools to make a mortgage in 2015 and beyond. The tools that you need now may look like the same old tools, but they now have a completely different meaning and dramatically different use. These tools are, of course, technology and compliance. Let's look at each and see what you need to make them work for you. In the past, a lender would buy a loan origination system, an LOS, and pretty much had all the technology that was needed to manufacture a mortgage. The LOS would keep track of mortgage process, and they were able to generate enough documents to process, underwrite, and even close a loan. Now an LOS needs to be far more sophisticated and be able to merge numerous separate and distinct resources just to give a lender a chance of producing a loan that is compliant and saleable. An LOS today needs to integrate in real time credit information, automated underwriting, private mortgage insurance, date-sensitive disclosures, flood insurance, document preparation services from start to finish along with state specifics, appraisal data requirements, pre-close and post-close quality control, ever-expanding investor loan delivery data, file requirements for loan boarding, and document imaging and retention, just to name a few. The second and equally important tool is compliance. Today, you'll need to be an expert in HPML and HOEPA, rate locks and change of circumstance, HMDA, fair lending, high-cost loans, and the newest change, TRID, and its new loan estimate and loan closing disclosure form. The list just seems to keep growing and growing. The difference now, if you miss a step in the process, some things can be fixed and some cannot. And violations could put you in jeopardy of penalties, fines, and reputational risks. But the reality is, credit unions are finding it difficult to keep up with the investment and knowledge required for today's mortgage market. Increasing costs plus increasing risk does not sound like a prudent business strategy. There must be a better way to satisfy your members' mortgage needs. And that is where QR Lending enters the picture. We can open the door to all of the latest integrated technologies. We have the compliance knowledge. We overcome challenges every day, and our staff is well-trained and works with you. Good afternoon, and welcome to QR Lending's The Right Tools and How to Use Them webinar. Your featured speakers today will be Patrick Blawat, Senior Loan Coordinator at QR Lending, and me, Denyse Behnke, Correspondent Coordinator. Together, we have more than 30 years of experience servicing credit union community, and we've been with QR Lending since its inception. Both Patrick and I deal with numerous credit unions on a daily basis and are dedicated to providing personal service and attention to our customers and the members they serve. Patrick, why don't you tell our audience why choosing QR Lending makes good sense?
Thanks, Denyse. Simply put, we're the right partner with the right tools. But this combination didn't happen by chance, and yes, more than a few thought that building a mortgage company in 2005 was a little crazy, while established mortgage companies were going out of business. But we had loved working with credit unions at CUNA Mutual Mortgage Corporation, and we had become a part of the credit union culture. So when CUNA Mortgage was sold, we knew that we needed to apply what we had learned and create something better for the credit union mortgage lending community. And we did. QR Lending can lend in all 50 states with all of our channels of business, all of our mortgage products, including conventional, FHA, and VA loans, contract services, private label subservicing, in addition to our full appraisal services nationwide. When we built QR Lending, we knew that one size does not fit all. So we created a business process and the technology to support the varied needs of the credit union market. We developed this process in 3 very easy steps. The first step was to build a technology platform that you, our customer, could use to originate mortgage loans. Why should you be required to buy and maintain a loan origination system at great risk and expense when you can use ours for free? You can originate loans for your members from our complete menu of products, including conventional, FHA, and VA loans. But what can you do with this free technology? Well, you can do all required disclosures in our system. You can pull credit and score the loans through LP, which is Freddie Mac's automated underwriting system, or through DO if you choose. You can service the loans, or QR Lending can do any or all of these functions for you. But what if I want to originate a loan for my portfolio, you may ask? You're just going to use the same system that you use to originate loans that you sell to QR Lending. There's no changes, and it's totally transparent to your member. And if you want to sell that loan to another investor, go right ahead. We even offer loan delivery options to others, including Fannie Mae, Freddie Mac, and the Federal Home Loan Banks. The second step was to build a better operations model and eliminate calls to multiple people for each step in the process. How about calling one person for everything? That's one phone number and one email address. You're going to get a dedicated loan coordinator to help you with all of your loan needs. There's no calling the pricing desk, the underwriting department, the closing department, or even the appraisal department. Just one person for all problem resolution. And of course, there's no call centers and no start from scratch conversations, so you're going to be talking to the same person every time. The third step addresses the one-size-fits-all business model. So let's break it down and talk about who does what. You're going to take the application and develop the relationship with your member. You offer your menu of other financial services and products. Keep in mind that QR Lending offers no other financial service products to your member, so there's no cross-selling ever on our part. Your loan coordinator backs you up every step of the way in the mortgage loan process. We can score your loan, lock the rate, handle the appraisal process, have the file underwritten, satisfy conditions, and schedule and coordinate the closing. Or you can do any or all of these functions if you wish. Many of our credit unions use multiple delivery channels. They might be a correspondent on conventional loans because they're comfortable doing most or all of the work themselves. But they like to use the wholesale channel for their VA loans because they want us to do more of the work, especially the underwriting. And for that member that's buying a second home out of state, they have QR Lending do everything from start to finish because they're unfamiliar with that state's lending or servicing requirements. When you make QR Lending your mortgage partner, you get our great service regardless of your volume. Whether you do 2 loans or 200 loans every month, you get the same technology, the same competitive pricing, and the same unsurpassed support from our loan coordinators. And we do have credit unions at both ends of this spectrum, from 2-person mortgage departments to nationwide lenders. Well, Denyse, how about lifting up the QR Lending hood and showing what really makes us run?
Great idea, Patrick. Earlier, we mentioned a number of functions that your technology needed to perform today to make a mortgage properly, and the numerous regulations that you must follow in order to be compliant. When you choose QR Lending as your mortgage partner, you get a lot more than just a dedicated staff in Madison, Wisconsin. We've done all the heavy lifting so you don't have to. We have integrated multiple resources to ensure that your mortgages are done quickly and accurately. Some of the companies that we rely on would include PC Lender, Equifax, CoreLogic, Credco, Kroll Factual Data, CBC, ArchMI, and MGIC, Freddie Mac, Fannie Mae DO, FHA and VA, DocMagic, Loretta Flood Insurance, MERS, Loan Care, InterThinks, and the QR Lending Appraisal Compliance System, all effectively integrated in one package for you to use. But since we've been doing mortgages with credit unions for quite a while, we would like to share some of our most frequently asked questions, and maybe we will touch on some things that concern you. Question 1. What if we need you to do our underwriting and closings on loans that we sell to Fannie, Freddie, and the Federal Home Loan Bank? Answer. QR Lending does perform all of these functions for some of its direct seller servicers. Each of our services is available on an a la carte and also on an as-needed basis. Question 2. What if we just want you to do our appraisal compliance service because we're not happy with the AMC we are using? Answer. QR Lending can offer its appraisal compliance services in all 50 states. We encourage you to have your local appraisers sign up with us. Approved QR Lending appraisers get paid their full rate, which is why they love working with us and give us great service in return. Appraisal orders are totally automated in our online system using our free loan origination system, so only a DU 3.2 upload is required, which means there is no manual entry of appraisal orders. And you're assigned a dedicated appraisal coordinator as well. Question 3. We want to offer FHA and VA loans to our members, but we don't have any experience in government loans, and they seem so complicated. Answer. We don't expect our customers to be experts, which is why your loan coordinator is. Your coordinator can answer any and all questions you have regarding scenarios, processing, disclosing, and funding. Training is an essential part of what we do, and your coordinator will ensure that you have an understanding of the government loan guidelines before selling the program to a member. Once you have an application, again, your coordinator tells you exactly what you'll need to obtain from your member for underwriting. I think everyone will agree that government loans can be tedious, but your loan coordinator removes the uncertainty for you. And now, I'd like to turn it over to Patrick for the final frequently asked question.
Thanks, Denyse. Question number 4, and with the huge amount of negative press regarding loan servicers, it's no wonder that this has become a popular question. Servicing loans in-house for ourselves and our investors is expensive and overflowing with operational and compliance risks. How do we maintain our member connection, remain compliant with regulations and investor requirements, and not have to worry about service levels? Well, the simple answer is yes, we can help with this too. A private label subservicing program from QR Lending's strategic partner, LoanCare, is our answer. But before we talk specifics on the benefits of subservicing, I'd like to give you a little background on our own experience with LoanCare and why QR Lending chose LoanCare to be its strategic partner. In 2005, QR Lending teamed up with LoanCare, which is a service-linked company and part of the Black Knight family of companies, to subservice its own loans. And over the last 10 years, we've continued to grow our relationship. They now handle over $3 billion in Fannie, Freddie, and Ginnie Mae loans for us across the United States. LoanCare has grown as well since its beginning in 1991, and now subservices over 550,000 loans in all 50 states and is the third largest subservicer in the nation. QR Lending is proud to be able to provide LoanCare's best-in-class subservicing program to its credit union clients. LoanCare's goal is to help you brand your name on the subservicing program so your members don't feel like they're being outsourced. LoanCare is flexible and offers several private label packages, from simply placing your name and logo on the monthly billing statements, to branding the borrower-facing website with your image and color scheme, to private labeling the other aspects of servicing. Choose the program that's right for you. With greater emphasis on your name, LoanCare's private label program promotes the relationship between you and your member. But before I leave this topic of subservicing, I'd like to make a couple of quick comments on why subservicing is a good idea. Subservicing is typically less expensive than servicing loans in-house. And also, when the servicing of a portfolio is transferred to a subservicer, the operational and compliance risks are also transferred. And remember that LoanCare is a subsidiary of Fidelity National Financial, Inc., which is a publicly traded company on the New York Stock Exchange under the symbol FNF. In addition, you and your members have the ability to gain access to advanced servicing technology without lead time or developmental expense. You'll be part of a robust private label program that will keep your name and image in front of your member at all times, which will add member retention and repeat business. You can expand your mortgage business without expanding infrastructure. And members can make payments in a variety of ways, including ACH, paying online, and paying at your branches, all leading to an enhanced borrower experience. Now, maybe you would like to hear what some of our customers say about us. Sherry is the loan service manager with University of Tennessee Federal Credit Union. When UT started searching for a new mortgage partner in 2008, they were looking for someone that offered technology, a web application, flexibility in where loans are delivered, as well as a servicing platform for the loans they decided to portfolio. They found all of this in addition to excellent service from their loan coordinator with QR Lending. The result was an increase in both efficiency and loan volume without having to add staff. Steve is a mortgage loan officer with Stark Federal Credit Union in Ohio. Steve has worked with QR Lending for the past few years and appreciates the communication that he has with all QR Lending staff and has developed a great working relationship with his loan coordinator. Steve has stated that he is never dissatisfied with any of the conversations he has had with QR Lending staff, and that includes whether loans are denied, approved, or if he's just looking for guidance on a loan scenario. Due to the level of service that we provide, the title companies that are used by Stark have referred business to QR Lending as well. If you're wondering what to do next, well, you could call Denyse, Mike, Sherry, Kathy, or any of our loan coordinators, but maybe you should just start with me. My name again is Patrick Blawat. My contact information is displayed on the screen. Please feel free to give me a call or send me an email. As a follow-up to today's webinar, you'll receive the names of a few of our customers. You may want to chat with them to get a first-hand idea of what it's like to work with us. You'll be very happy that you did. Thank you for spending some time with us today, and have a great afternoon.